Okay. Welcome. Friday, the 6th of December. We're still doing sniper. We're still doing it kind of in beginner stage, even because a lot of us are seasoned professionals. We are new to the sniper platform, so we want to make sure that we're getting on board with everyone and making sure everybody can see what's going on and follow along with us and take these setups and look at these setups all together. We do invite questions because obviously questions just about sniper and the setups in general, other setups you might have looked at that you want us to back test, but also if there's any other general trading concerns, either about the scanner, questions, how to operate it, how to begin and everything like that. It's obviously presented by myself, John Oliver, by Jim Aguilera. And the idea behind these is, as everyone's getting on, we're in this big growth phase at the moment. And we want to get people up and running as quickly as possible on this scanner, which is proving to be very lucrative for us. So we want it to be lucrative for you too. Obviously, I'm going to shoot this disclaimer up here. I'm not going to read it out, but give you a few seconds to read through that. We are doing this purely as an educational tool, so we can help you improve your trading. That is our goal, and we want to do it in a nice, safe environment, be able to answer questions and get everyone on board. So having said that, having seen the disclaimer, I am going to shoot over. I'm going to start off with gold and silver. I did take some positions last night actually on this, and I'm going to shrink my screen down here a little bit because I want everyone to just see. Don't know why that jumped out of that. But this is gold on the left and this is silver on the right. These are both on the 5-minute. And I just want you to see, I mean, sometimes the US30 and the NAS move together. Sometimes, like we just saw, if we were looking at it this morning, and Jim will go over it in a little while, the Dow and the NAS can move totally different ways. But one of the things that I look at when I'm comparing strategies like the Dow and NAS is one of them giving an indication to the other about a possible move. And very often, just looking at this over the last few days, it seems that silver and gold move pretty much the same, but very often there's a slight easier trend to see on silver that we can then look at gold and say, oh yeah, I see that setting up. So when we're looking at these setups here, let me just squidge that up a bit so we can kind of see the total. You can see, nice. We are below the primary trend line here. Primary trend line is above our candles and it's red. When the candle's above the primary trend line, it turns blue. So very easy to tell where we're going to go. These dotted lines up here and down here are the range that we're in for the session. So they change depending on the time frame you put on here, but they'll show you the range. But they do change. So if this suddenly jumped out higher than this, that range will push up. But it gives you a good visual of where the range is on the current trading session. We can see here that although this was counter trend right here, it's the very similar counter trend here. So here it was at 2:40 Greenwich Mean Time when we had the crossover, and right over here it came a little bit later at 2:50. So very often if you look at silver, you might get a 10-minute advance notice that something might be moving on gold. And that's one of the things I like to have both of these strategies open. Now to open these, obviously it's very easy. You go to the tab that you're currently on. You know how to do this, but I'll just show you. You can duplicate the tab is what you want to do, and it will open up on the same screen that you're on. And then what you want to do is move tab to another window and click new window, and it will open up in another window. And the reason why you want to do that is because then you can resize them, especially if you have a screen that will hold that. Obviously, it's difficult on a phone, but most of us trade with at least one screen. I trade with two. Jim trades with about 13, but only kidding. But hit new window and a new window will open, and that's how you can get them both together. Just size them so that you can see them both at the same time. So right here, silver gave us a nice heads up. It was counter trend, but this is just by way of example. We don't really like counter trend. At 245, and over on gold, the signal didn't come to 250. However, a safer trade, this is what we learned from one of our other strategies, is when the two EMAs, obviously, and the candles cross the primary trend line. So if you waited until here to get in, some may consider it a late entry, and obviously you've left all of this on the table. But don't forget, up to this is counter trend. So unless you're experienced, that's something you probably want to avoid. Once it crosses this primary trend line and turns blue, we are in buy mode. So we did get a crossover here around, it crossed back up here. Let me just put my 50% line in here, as I like to do on my stochastic, and I'll do that on here as well. I do like to have that on the 50 roughly, so that we can see where it does reject off and where it does bounce through. I just like that little visual there. But we can see on silver, we really went through. Maybe if you take this as a possible confirmation here and go here, you're looking at 320 over here. And again on here is 5 minutes later at 325, 326 is when you got the gold setup. So let's back test that as we go along. You know, do that on your own time. I'm not going to do it on the call here, but this could be a nice little pre-indication. You know, a lot of our indicators are going to be lagging indicators, which means we're behind in analyzing what's going on in the market. And this may prove to be a little advanced indicator here if we look at silver before gold. Gold does move quite a lot. You do have to be very careful. You can make a lot of money on gold, but you can also lose a lot of money if you get it wrong. So right now, if you're new to gold, make sure you're taking the trades that really make sense for you on trend, and you know, just be careful with it. Looking at here, obviously on gold, we did get the setup down here, right here, that we're turning around. That was our bottom of that little pullback here. And after that, we went here, broke structure here, and up we went. So right here with the crossover was pretty much where we broke this structure here, and off we went. I did also, what I like to do is what we're looking at obviously is going to higher time frames, see where our areas are going to be. We can see back here, you know, we were up at 27.90 at the high here, 27.15 here. But recently, you know, we've been in this tight little range around here, this on gold. And when we open this up a little bit, you can see that there's been a There's been a range, quite a strong range here, for instance. Hit it here, broke through, came down, tested it, broke through, came back up here, tested it, tested it. So we know that's a strong resistance up there recently. And obviously down here, the strong resistance was actually around, it's jumping around so much. Let's turn that off. I think that's what's doing it. Yeah, so we got a strong resistance right about there. We hit it several times here, and we've got another one right along this line here. So that's on the 4 hour. When we drop down to the 1 hour, we can see, yeah, we're happy with this. We're happy with this. And we're happy with this earlier one here. On silver, already marked up the same way. So we're looking at these ranges over at silver here. We did break down here, and again we got another one right down here that we should put in, because that is pretty strong right there. So that's how we look at those higher time frames. 4 hour on silver. Got another one up there. It's quite strong right here. So I do like to put those lines on so that we can see where we go, and when we drop down in the different time levels, they will still stay in place. We can adjust them as we drop down. 30-minute, 15-minute on silver. 15-minute on gold. Yeah, we're okay on that. You know, it always sets the default when you open this, sniper always sets to 5 minutes. So always be aware that the 5-minute, these lines do not save. So if you do get bounced out, whatever, these markups won't save. So be aware of that. And then when we're looking at the 5-minute for a little bit more of an an overview. When you're scalping, I like to look at the 5-minute on sniper, and then trade on the 1-minute. We do have a 3-minute as well. I also like to trade on. Gives me a little bit more of a confirmation there. Right now we're on gold. We're going down to the oversold, so we'd have to wait for that to go through there and come back up if that's what it's going to do. But we only just broke through the primary trend line, so and our 2 EMAs are below the primary trend line, so it's not really a strong entry right there. Likewise here, we're bouncing off the 50 range on silver on the 3-minute. But again, our EMAs are below the primary trend line, and we're below the primary trend line. Trend line there is bearish. We did get a crossover on the blue and the red there, 1506. This one came, actually in this case, the gold was a little bit earlier than silver, so that is interesting. But right now we can't do anything there with gold and silver, just because we're so close to the primary trend line. Stochastic isn't giving us an entry just yet. So let's just drop down to the 1 minute. Again, and if you just a tip here, if you want to change these lines up here, go to settings down here. If you want to change the labels, sorry, down here, go to labels and you can check these boxes. So I like to have symbol last price label, the pre-post price label, and no overlapping labels so that you can actually see what they are. And I do like the countdown to close as well, to be on as well. So that gives you the countdown there when the candle closes. So make sure that you've got that one checked because it does, again, it does go off. And I like to have the candle on there so that I can see when it opens and closes. So nothing there is setting up. So I think we're going to shoot over to Jim and see if we've got any setups over there on NAS and NAS and the Dow, because we're not seeing anything really set up there. We're waiting for something here. Bear in mind, the other thing that, you know, obviously we've always got to, we went through all the red folder news. That's why I already, you know, hopefully you already went through that. We did have obviously non-farm payroll private and non-farm payroll as well. That was at 6:30 Mountain Standard Time this morning. And the unemployment rate, that was all at 6:30. So that's why you got some moves there. If you trade in any CAD pairs, obviously 8 a.m. was the one to be aware of. We did have just a minute ago at 8 a.m. the Michigan consumer sentiment for December, which is also red folder. But after that, the only ones to look at, which, you know, me personally, I don't worry about any folders other than red. But when these Federal Reserve guys talk, you've got to be a little bit careful because you don't know what they're going to say, and not so much what they're going to say, but how they're going to answer people. So very often the reporters in the room will be asking questions, and if they slip up or let something slip out, that can make something jump quite wildly. And although it says 8:30, it depends how long they're talking for. Obviously, if it's Jerome Powell, it's going to be a red folder news. But some of these guys, you know, can move the markets a little bit. I wouldn't worry too much about it, but just be aware that 8:30, you know, probably for 15, 20 minutes, if he says something crazy, you might get a sudden jump at 10 o'clock, same thing, 15, 20 minutes. And Brett Daly speech at 11, 15 or 20 minutes. It is Friday, so, you know, don't forget people are going to be closing out their positions at the end of the session as well. So be aware of that as well. There are some things coming up later that are medium. But, you know, this one, if you're trading gold, might affect you. But again, I wouldn't worry too much about that. So what I'm going to do now is I'm going to stop sharing my screen. Are you ready, Jim, to take over?
Yep.
Okay. I'm going to stop sharing my screen. I'm going to get Jim Aguilera on the phone. Most of it on the Zoom. Most of you know Jim. He is a master trader. He is my mentor. He is my coach. He's the one that introduced me to trading. He was the one that laughed at my trading, literally, especially when I was over trading and people were asking me, you know, how many trades did you take? And people were saying 3 and 4, 5. And they say, how many people took more than 5? I put my hand up. And Jim was kind of saying, what? How many people took more than 10 trades? I'd still keep my hand up. And he would turn around and then they would say, how many people had more than 15 trades this morning? My hand was still up. And Jim had his head in his hands in desperation, but we got through that stage, thankfully. And Jim has been keeping me on track ever since. So I'm going to stop sharing my screen and hand it over to you, Jim. Have I got you as co-host? There we go.
Thanks,
So
John.
take it away.
All right. So what we got here is our US30. And I know John went over this, so and he uses a little bit different website, but I always like to go to my news website, which for me is Forex Factory, and make sure I'm aware of any news that's coming up on any related pairs that I'm trading. So when I trade, I usually trade things related to the US dollar. So I'm focused on what US dollar news is coming out. And so if you're trading a US index, obviously S&P 500, NAS100, or US30, even gold or any USD Forex pairs, US news will impact those pairs. Okay. And then this particular news event, the non-farm employment change, which is you'll hear abbreviated as NFP, is one of the largest, most volatile news events of the month. It's always the first Friday of every month. And a couple of the other big volatile ones are like the FOMC meeting minutes or the federal funds rate. Those are really big events, and CPI month over month and year over year can be big as well. But of course, you should pay attention to all red folder news events for the currency pair that you're trading. And what that means really is that you definitely don't want to take a trade right at that news event dropping. So I'm in Pacific time here, so this news came out at 5:30. And the other thing you don't want to do typically is take a trade right at the market open. So, for me, that's 6:30 Pacific time. And the reason is it's just unpredictable. Okay. I'm going to go over to the charts here. So the, the market is moved primarily by, big hedge funds, big banks, and so forth. And, they pour a lot of money into this market. And, their goal basically is to take our money. Right. And so you never can know what they're going to do and which direction they're going to move in. It doesn't matter what the news is. Doesn't matter if the news says it's good for the currency or good for indexes. Doesn't mean that it's going to move in the direction that the news would indicate, and it probably will eventually. But the market makers are there to trick you and make you think the market's going one way and then take it the other way. They're there to take out your stop losses, trigger your pending orders, and then take the trade the other way, right? And a lot of that happens right around that market opener, that news drop. And that's why we kind of want to stay out, let the market settle, and then figure out what direction eventually it is going to go. Okay. So that's why we want to be wary of it and then stay out of it. And then you can usually tell when the market starts to settle and start to head in a particular direction. So for us here, I'm going to just take a look at this US30 here. This is the let's see, this is the news candle here. Okay, so as you can see, it wicked down right at the news, and it came down and basically swept all of the lows of the London session and the Tokyo session. So anybody that was in buys, was taken out. Their stop losses were taken out. Also, besides taking out stop loss, is some people like to be breakout traders, which means when price breaks a level of support or resistance, they have a limit order set, like a buy stop or a sell stop, and it can trigger those limit orders and then immediately just go the other way. So That's what happened here with this wick, came down, liquidated all the people over here that were in buys with their stop losses below the lows. Okay. And then immediately came up and then took out all of these highs that were right here. Okay. So anybody that was in a sell here with a stop loss around here took them out as well. And then obviously shot up pretty good. And then it has kind of just been hanging around here. Now, one of the things that I would recommend here is, size your chart up based on what the actual volatility is, right? Because if I was to go look at this chart like this, I'd be like, oh, that's not moving very much. Well, if we just measure here from the top to the bottom, 130 pips. So actually, it is moving quite a bit, right? So I like to get a visual representation of how much the market is moving for myself. And, if I could fit more of this chart on my screen, I would. But, at least now I know, okay, that's 130 pips. So this candle here, I know is pretty big, right? If we measure this candle, it's a 20 plus pip candle. It gives me just a better scale understanding of how much this market is moving. Okay, because if I know this is a 21, 22 pip candle and I'm trying to get in at the top of it, I know that my stop loss that I like to use, which is roughly, 25 pips, depending on how the market's moving, is barely even covering the back of this candle, right? And so, that's just a little tip. Now, for me, if I was actually trading, well, I was trading here, right? So this was news, and then right here at 14:30 was the New York Open, and we got another, we got a wick down, a wick up, and then to me a lot of indecision. Okay, and so I'm kind of waiting for this market to decide what it wants to do, and it's not real clean. I did have one good indication here, and this is a little bit more advanced, but when this big green candle shot up, it created imbalance, and this is, it's a little more advanced, but when the market moves up and down like this is considered efficient. Okay, there's buyers and sellers in the market, and when it moves up and down, then the buyers and sellers are exchanging evenly, and the market is considered moving efficient. When you get a big green candle like this, there was no selling involved here. Okay, and so there's what's called an inefficiency. So if we zoom in here and we look at an imbalance here, an imbalance is the difference in the high and the low of the first and third candle where you had a big move. Okay, so the high of the previous candle here was the wick right there, and then the low of the third candle was right there. And in order to identify the imbalance, I like to draw a box, and then I have my box set here. You can go into the settings here, and then you can add a middle line, and that'll give you a 50% of that imbalance. And a lot of times what the market likes to do is come back, and we call it fill the imbalance. Okay, and the way that the market likes to do it a lot of times, not always, is to come to around that 50% level. And lo and behold, if I take this, we came exactly to the 50% level. Okay, and so from there we had a move of 70 pips. Okay, so once the market comes and it fills this imbalance, it gives the big banks and the market makers the opportunity to now take this trade wherever they want. Now they can take it up if they want, they can continue to take it down, but their inefficient trade over here, it has now been made whole, and so now they have the room to take this market however they want. I'll take that off there. Now, for me, this is still, not exactly picking a direction, because we could have really just flown out of here now that we filled that imbalance, and we're still not seeing that. But we did have a trade opportunity, because if you were aware of that, and you use that as part of your strategy, as soon as this broke up above the EMAs, you could have taken, around 20 pips here, 20, 30 pips. So,
Hey, I had a quick question, Jim.
Yeah.
Do you like to draw your imbalances up on the 5 minute or the 15 minute? What time frame do you like to draw them up on?
So for US indices, I like to draw them up anywhere between the 1 and the 5. And so if the imbalance on the 5 is too big, if I drill down to the 3 and I find a tighter one, or I drill down to the 1, I find a tighter one, then I like to use an imbalance that, where the range is not so large. If I'm looking at Forex pairs, then I'm usually, looking at 5 to 15 minutes.
Great, thank you.
You're welcome. Okay, so I'm just going to go over the entry styles, even though that this is kind of news and market open. I'm going to use it a little bit as an example for, the trade entries that I like to look for. So primarily what I like to look for is, first of all, this is our primary trend line. And so when we're above the primary trend line, we're looking for buy setups. And when we're below the primary trend line and the trend line is red, we're looking for sell. Okay. So in this example, from the moment of this news up until most of the rest of this morning, we're above the blue primary trend line. So we're looking for buys. Okay. And then the secondary confirmation that I'm looking for is that these EMAs are crossed where blue is above red. Okay. So blue is above red this whole time, all up until right here. They kind of cross down for a little bit. They cross up, they cross down. So during this whole move here, the blue is above the red. So I'm also looking only for buys. Okay. And so my additional confirmation now that I'm looking for is to use the stochastic tool down here to look for a moment when the line here comes below the blue line and then crosses back up. Okay. So once it does that, that becomes an additional, the third confirmation for me. So I'm going to put a vertical line here just so we can kind of see that it came, actually it happened over here too. So it came right here, and on this candle, it came up, okay? So right at that moment, it came up. So if I'm trading, okay, I'm waiting, like I missed all this based on this particular strategy and these confirmations. So what I'm waiting for patiently is for this line to start coming down. Once it starts coming down, now I'm getting ready. Now I'm figuring out what lot size I'm going to use. I'm getting ready to hit the buy button, and I'm just waiting for that last bit confirmation to happen. Okay, so I'm going to zoom in here. Once it gets down here with this candle, now I'm ready. Now, I don't know this candle is going to be bullish, and I don't know this is going to cross up, because this could keep going down. Okay, but I'm ready in case this goes up. So this candle, I'm on a 1 minute chart. So this candle is taking 1 minute to paint. And, it's probably moving up and down. And I'm just waiting patiently. Okay. And I already know that I don't know where it's going to close. Right. But it's probably going to close green, or it's going to close green if I'm going to hit the button at all. If it closes red, I'm not even going to hit the button. Okay. But I know it's going to close somewhere, and I know I'm going to use roughly a 25 pip stop. And I got to make sure that I like where my stop loss is, depending on where it's going to hit. And I know that my first target is going to be around these highs, even though I like to take more pips, or I like to at least set up for about 50 pips. This stop loss is below the red EMA. which is good. Obviously, it's going to be below this candle, which is good. I'm not quite below here, but I'm okay because I'm below the ready MA and I've got some room. And I don't know where this green candle is going to close yet. You know, if it closes really high, like up here, then you know, I might need to use a bigger stop, or I might need to we'll wait for a little bit bigger pullback. If this candle was to close really high, like close to this level, I probably would stay out of this trade. Okay. So candle ends up closing here. Literally, as I see the countdown timer over here, closing down to 3, 2, 1. Like at that 1, I know that this is probably going to be green, right? I mean, from 1 to 0, it's almost impossible that it's going to go completely red, right? And so as soon as that 1 closes, hits 0, I just hit buy if I like everything else. So if I was to do that here, this actually, you know, doesn't materialize into a super great trade. It only goes a few pips in profit, maybe 10. Let's see here, 15. Yeah, it goes 12 pips. Depending on your trading style, you know, you could have let this go. This may have hit your stop loss here, came really close. And then eventually it goes to a decent profit. But I'm more importantly, I'm just trying to show you guys exactly what I'm looking for when I'm looking for a setup. This could have been either, you know, a few pips of profit, could have been a break even, could have been a loss, or it could have been a big win, depending on how long you held that. Okay. But I wanted to kind of just draw out exactly what confirmation I'm looking for. All right. So then that didn't materialize. Now I'm looking to see when my next confirmation is. So we get a break below here. We're still blue above red. We're still above the primary trend line that's blue. And now I'm looking for the next place that this line crosses up, which happens here. Okay. Now, for me personally, I'm okay with the fact that I got a cross up here. The blue is still above the red, and I am closing above this candle, but I'm still below this blue line. I'm okay with that. And so I would take another entry here. So you get in around here. This time, my stop is well outside the lower Bollinger Band. It's below these wicks. Obviously, it's below this structure and pullback here. And then again, I'm targeting, you know, at least to here and maybe the full 50. Okay. Now this trade does a little better than the previous one. And if you did take a loss here, if you took a full loss of the 25 in my example of how I trade, you know, you get all of that and more back in this trade. Now, what happens when you're trading up against a potential resistance level is, and you're trying to target further than that, you want to trail your stop, okay? And so originally your stop is down here. We go a little bit into profit, you kind of pull back to entry here, and then we start to move away. So as soon as we start to break above this previous high candle here, so with this candle, I would move my stop into a little bit of profit, okay? And then we get a little bit of pullback here with this red candle, and then we break back above. Once I see that market structure is still showing that we want to go up, and we've had a pullback, now I can move my stop to here, below this pullback, okay? And then as I start to approach this resistance, I want to get my stop loss closer because sometimes resistance is an area where price can come exactly to and then have a big pullback. Sometimes we can come just a little short of resistance. Okay. And there's a reason actually, because this candle is considered an order block. And so sometimes price will just come to the middle of this order block and reverse. Okay, and sometimes we can just break through resistance. We don't know what the market's going to do. But what I don't want is I don't want to have not trailed my stop close and then have this come all the way down and hit my trailing stop way down here and me have given back 25 pips, right? So as this starts to get up to resistance, probably during this candle, I'm probably up here with my stop, okay? And then I get a little pullback, and then now I'm pushing really close to where my TP is up here. Now I'm definitely, my stop is down here to see if this candle can hit my take profit. See if this candle wants to break this resistance. And then it doesn't. It doesn't quite come all the way to here, and it comes down. So I didn't get all the pips, and it's almost impossible to get every single pip on the board exactly, right? But instead of giving back, all this, then, I only gave back a little bit of this here. Now, obviously, if I would have just left this down here, I would have eventually hit 50, okay? But I don't like to see, I don't like to give back this much because we don't know if this is just going to keep coming down or if it's going to come up. So I'd rather take, 35, 40, whatever that would have been here. Let's see. It would have been about 35. I'd rather just take 35 and be happy with it than, be stressed out, wondering how far this is going to go. Is it going to hit my other stop down here that's only worth like 10 pips? Okay. And then, there'll always be another trade if I'm not satisfied with 35 pips, but actually 35 pips, if you're risking, say 1% of your account is great, right? I like to risk like 2%. So, uh, that's really great. I could be done for the day. So there is how I like to look for entries. Now, after this trade, what are we doing? We're looking for the same setup. Now we get that setup over here. So we get it on this candle. This time we pull back to the red EMA. We have a bullish engulfing candle, which means the up candle is bigger than the red candle next to it, which is all good. My only concern here is that I have a very little bit of distance to go before we get to this resistance level. So when I draw up a trade here, and I like to target, at least 30, but ideally 50. And I like to use a 25 pip stop. If it only came to here, I'm risking 25%, 25 pips potentially to only get 15 if it only came to here. So that's not even a 1-to-1 risk to reward ratio. And so, it's high risk. So I don't love to take those. If you do take a trade like that, and sometimes I do, you're going to trail your stop a lot faster and tighter than you might otherwise, right? So after this very first candle, even though it's only 7-8 pips, I might immediately go here to make sure that there's no longer any possibility that I'm going to lose, and then I'm going to see if it wants to break through here. Okay, and then actually it does break. So once it breaks, I move this to below where the previous resistance area was and see if it wants to keep going. And it does, it goes a little bit and then it comes back down, takes me out. So I end up with, 12 pips. Okay, great. So now I'm looking for the next setup to where it comes down here and breaks above. So it happens here. And, according to all the rules I just said, this kind of passes. But now, we're getting really close to this area where it keeps rejecting. This little candle compared to this big bearish candle is not giving me a lot of confidence that I have a potentially strong buy continuation coming up. So, I mean, you could take this, it would be a loser. But for me, there's just not enough reward up here to the previous resistance. And this small bullish candle compared to this bearish candle is not giving me any confidence that this really wants to move up. Okay. So what I'm looking for after I see something like this that I don't like is I'm looking for a deeper pullback. Okay. Once I get a deeper pullback and a better combination in the candles of a better continuation, okay, like this morning star here, then I'd be more confident to get into more buys. Now we're getting into the US market open here on this candle, so I really actually wouldn't take this. But if we were, you know, at a different time, this would look more promising than this one because now I have more room to get back up here. I've had a deeper pullback and I'd be, more interested in getting in around here. Okay. As far as the morning star pattern, you guys can study. There's something called a candlestick Bible. You can just Google it. It's a big PDF document. It talks about all the different candle patterns. Okay, and I don't know them all. There's so many, but there's a few good ones. And the evening star and morning star patterns, and the bullish and bearish engulfing, doji candles, things like that. Those are all good candle patterns to be aware of and that you can use to your advantage when you're trading. All right, so let's just go see what this has done here. So really not a lot of direction here, okay? Not a lot of decisiveness here. I really wouldn't be looking at anything here. What I see here is this, okay? So I'm not interested in any buys until I get out of here, and not just crossing here, but then looking for confirmations. But I'm not even entertaining buys until I get out of here. And then, down here, I mean, this could head down, and we do have, a good amount of a distance to come down all the way to this level. So this could be setting up. So if we can break this here and get a kind of like a break and then a pullback, and then maybe something that pulls up above the overbought here, once we're past this support level and then we get a break up and then down, I would be interested in getting into sells down here and using this as a potential target, a place where I could either put my take profit or at the very least start trailing my stop closely if I get down to this area. Okay. I'm going to go here and look at the NAS. Okay. So NAS moved a lot cleaner coming out of news and market open. And I've already showed you the type of entries that I like to use. My primary entry, obviously the EMAs are all in order here for looking for buys. And what I'm looking for is for this to come down and be oversold and then cross back up on the very next candle. This is a good example here of something else I can share with you. And John mentioned this on our last training. But this cross up down here comes on a red candle. So I would not get into this trade until I saw another reason that this could continue up. Okay. So on the very next candle, we get a bullish engulfing green candle, right? Bullish engulfing means that the up candle is bigger than the down candle next to it. So even though the cross happened on this candle down here, I would wait for a better confirmation, which is this candle closing higher than this candle. Okay. Now, once again, we have a little resistance level there. So something to be wary of. On NAS, I like to target 30. I don't like to wait that long. And usually it takes NAS to go 30 pips a lot longer than it takes US30 to go 50. Okay, but I still like to use about a 20 to 25 pip stop. In this case, I'm right behind the red EMA and I'm below this wick. So 23, 24, 25 pips works. And then, you know, I immediately go up here really fast in 2 minutes. I'm not sure if I would have had a chance to move my stop to break even, but if I did, I probably would have got wicked out at break even. And then if I managed to hold this through the break of this top here, I definitely would have had my trailing stop loss here and then would have got taken out here with just a few pips. Okay. Now, eventually this thing did run, but also, you know, gave us another entry. Gave us another entry right here on this candle. We had to cross down, cross back up. And then this one easily goes 30. Okay. I would have moved my my stop loss to break even. Once we broke the top here, I would have moved it up here maybe 5 pips. And then once we had a pullback and a continuation, my stop loss would have ended up here, below here. And then once we get to really close to my TP, I like to trail my stop because I don't want to give back a lot of pips. And so I may have gotten taken out here, trailing up to here before it actually broke. So I could have potentially walked away with like 19 or 20 instead of the full 30. Okay. And a little note on that. However you trade, and if you're new, you probably don't even trade yet, right? But however you decide that you're going to trade, you have to come up with a trading plan and a strategy that you're going to stick to. Okay. So if you like to have a set risk to reward, a set TP, and you're going to let the trade ride, you know, maybe with little trade management, you know, at least moving your stop loss to break even for whatever reason that is. When you break a, you know, resistance level, when you have your first pullback and your first continuation, you know, whatever it is. And then your trading plan says, I'm going to let this ride to my TP, or it's going to hit my break even. And that's it. That's my trading plan. I can walk away from this trade and let it do what it does, right? Maybe that's your trading plan, you know, or maybe it's like a fixed number. I move every time this market moves 10 pips, I move my stop 5 more into profit. But whatever it is, you're going to want to have back tested that, right? You're going to want to come and look at situations like these and say, okay, if I would have just let it ride, would it have hit my TP? Okay. Of course, it's going to do that sometimes. Sometimes it's going to come back down and taking you out of break even. If you don't do break even type of trade management, sometimes it's going to come back and hit your stop loss. But you're creating a journal and a research with your back testing to find out which one of these type of trade management styles is going to yield you the result that you want the most. Okay. And sometimes they're close, right? Sometimes, oh, you know, it's kind of would have worked out both ways. Um, and maybe sitting here and managing it stresses you out. And if managing stresses you out, and leaving it and letting it ride works out enough times, maybe that's your strategy, right? But whatever it is, you want to stick to it. Okay, so just because I'm saying that I trail my stop based on just, you know, this kind of market structure, that doesn't mean that that's what you have to do. And a matter of fact, I know John does it different. And you know, I know other people do it different. And so you do the strategy that works for you and make it your own. But what we do want to do is use this tool for the confirmations that it's showing us. And we're getting almost to the hour here. And I just want to show you some other ways that you could use this when you have a big move like this and you're not quite getting the pullbacks here that you're looking for. Because our last pullback was here, and that was market open, and we don't get another one until here, right? And so from that time, we go 100 pips on NAS, which is huge, and we don't get an entry according to the stochastic, entry. And so what other entries could you look for? Well, you're definitely looking for a pullback, first of all. And, if it doesn't pull back far enough down here, then, what are you looking for? So you could look for, any kind of pullback and then any kind of break of structure, going back in the direction of the trade. So here we get another nice morning star. Okay. We get a pullback with a red candle. And then, we get this doji candle, and then we get a bullish engulfing. Okay. So morning star pattern is a bullish candlestick pattern. And it's actually perfect because we get a pullback, we get the morning star with a wick on the bottom, and then we engulf both these candles and we break the resistance. So this is a confirmation that we can take this up. Okay. Obviously it pulls back right away, but it's okay. We just stomach the pullback and we go, right? Now we get the exact same setup here. All right. We get a pullback, we get a doji candle, and then we get a much stronger confirmation with the bullish engulfing. This one had almost zero drawdown, right? And then it goes. And then here, we get another pullback, some nice wicks on the bottom, a big bullish engulfing. And then, this move is not as strong, but it definitely, still goes up. So these are some other ways you can look at confirmations when you don't have this confirmation down here. And the only thing that I would say is if you're trying that, make sure you try it in demo or back test it here like I just did before you actually, get into it. But I like that move when, I see a lot of volume in the market and I'm not getting the pullback that I'm looking for. Then I'm looking for, what could be a secondary type of entry that I could add to my arsenal that I could use, besides waiting for these pullbacks. All right. So I'm done here. I'll stop sharing, but see if we have any questions.